So I'm going to give you a quick video demonstration of our ASC Pro Forma model. It is an Excel model which you can download instantly on our website. So we're just going to run through each one of these tabs real quick to see what you get for your money. So first off, this is just a summary tab that gives you some quick financial statistics that sort of summarize everything else that you would have in the model. So on this first page you could see your debt to equity split for your original capitalization. You could see what your total 5-year distributions are, as well as your 5-year cash on cash return on investment. So that would be your distributions that you make back on top of your equity investment. You could see what the fully ramped up revenues and net income are, as well as case volumes. You can see what your total facility square footage is, as well as your total full-time equivalent staff members and your operating room needs. This next tab is our capital plan tab. So this is your sources and uses of funds that you would have to plan out if you're doing a startup or a new facility renovation. Up here under the sources of funds, it looks like we're raising $7.1 million through equity and debt. You can see how that money is split between the physicians and the hospital, and then how much of that is financed through debt. It looks like they're taking out a building loan and an equipment loan on this particular capitalization. And then under uses of funds, you can see they're going to use all of that $7.1 million that they raised. About $2.3 million of that is going into the facility, which is a 10,000 square foot facility. About $1.4 million is going into equipment, movable and fixed equipment, instrumentation, as well as information systems. And then quite a bit of money, $3.4 million on this particular one, is going into soft costs, which would be startup consulting costs, staff costs, and then your starting cash balance. This next tab is our physician data tab. This is where you would key in all your physicians who are projected to use your facility, and there's quite a bit of room for specificity. You could put in their actual physician specialties, projected collections, material costs, how long their cases are, things like that. Under the volume projections, this rolls up the physician data into surgical specialty groups, and then you can ramp up your case volume accordingly. This particular one ramps up over 3 years, and then they will roll up your projected revenues. You could manage your account receivable expectations here, and then you can also key in your projected supply and implant costs per case. We have an OR utilization tab here. If you're going to assign cases to particular ORs or specialties to particular ORs, you can calculate when you're going to hit capacity so you know how large to build out your facility. We have a projected expense tab here, which has staff costs, benefits. It rolls up your supply and implant costs. It rolls up your facility costs, professional fees, and other forms of overhead. There's actually more detail for the staffing plan, which rolls back up into that expense schedule. Here you can plan out your entire staff by area, and then you can put in their salaries and the number of FTEs in each position. So here we have perioperative, pre and post-op, and then administrative business office professionals. We have our 3 traditional financial statements, which includes our income statement, our cash flow statement, and our balance sheet statement. You can see here the balance sheet does balance. And then we have some more nuanced schedules. We have a capital expenditure tab. So this is where you would have to plan for future medical equipment and facility replacements, because your equipment and facilities will wear out and you'll have to replace them. And then under our working capital tab, you can plan for inventory, accounts receivable, and cash. And then last but not least, we have 2 loan schedules. If you're going to be taking out debt, you can key in the amount of debt here with your interest rate and loan period terms for both equipment and building loans.